Hello everyone, George DeSantis here with a look at the market for the week ending November 4th, 2016. Before we begin, let's do the usual, read your disclaimer. Trading and investing has large potential rewards and large potential risks. So this video presentation is designed for educational purposes only and is not a solicitation or advice to buy or sell any securities or other tradable instruments. You must be aware of the risks and be willing to accept them in order to invest in the markets. So consult a licensed professional investment advisor for investment advice. This is not investment advice. Let's take a look at the monthly chart of the S&P 500. So here's the monthly chart of the S&P 500 that we usually look at. First thing to note is that the Kalman filter is still above the instantaneous trend line. But again, this is the longer term chart. Each bar is representing a whole month's data. So we can see here that the Kalman filter rolled over in the month of October. And so far in November, with which we only had about 4 days of trading, we have a red bar. We do have the market closing very much at the low of the bar for the month. We all know that from last couple of weeks trading, but especially last week. The parabolic is below the most recent bar, so there is no indication to reverse the trend, the long-term trend on this monthly chart. But on the MACD indicator all the way down here, we can see that MACD, as we saw earlier a couple of weeks ago, was just maintaining this zero line here, but now it's trending down a bit. Now, of course, we all know the election results have been anticipated. There's a lot of uncertainty, and we can go into all of the what ifs and why the market dropped as it did in the last couple of weeks. But what really matters is where's the market now and what can we anticipate in the near future if we can possibly do that. So at the bottom of the chart here, we have Elder Force Index now crossing below the zero line. So the market took a really good sized drop here during the past couple of weeks, and it's reflected in the monthly chart. Let's take a look at the weekly chart. So here's a weekly chart of the S&P 500. It's similar to the one we were looking at for many months. I had to replot it, different coloring, that sort of thing. However, we can see that last week, of course, I mentioned to you, we saw that the Kalman filter crossed below the instantaneous trend line. We had this bearish engulfing candlestick here. And of course, we know that last week that was followed by another big drop on a bearish candlestick, and this red colored body of the candlestick tells us that. And so we found that we entered a downtrend last week, definitely with the crossing of the Kalman filter, and we continued the downtrend. So the question becomes now, do we find support anywhere here? We broke through that support level, potential support level at 2100. We were looking at that as support for quite a while. We could see that it held as a resistance here, and then it turned to support, but then it didn't hold as support. So now we have to ask the question, where's the next level of support? It appears to be, it could be somewhere around 2050, because we can find some support here, we find some support here and here. So we can assume that this is one level of support that we might find could hold up here. Now, so that the parabolic is still above the most recent bar, last 3 weeks. So the trend is definitely down on the weekly chart. The idea now is, so what do we do? Where do we find, if we find support, where will it be? And of course, hopefully we all have some cash on the sideline. We didn't find ourselves fully invested in this downtrend all the way from October 25th or so. So now where do we look to buy? It seems to me that percent R, the 30-period percent R, is now below 50%. The market is becoming oversold. We can see that RSI 12 is now resting on the 40% line. It's still above 40. I think it's 40.865. So, technically it's just above 40. If we get some support here, as a result of the clarification of the election results and that sort of thing, and we get some support here, it could very well present us with a good buying opportunity. So we'll see how that works out. I'll talk more about that in a minute. MACD is trending down. We had a bit of a divergence here, but it wasn't a classic divergence because the bears never pulled it down below the zero line. So, so we have a downtrend, and now that we had a downtrend since last week, or even before that, and now we have to decide where do we find support and how do we approach this market from here on. Let's take a look at the daily chart. Here's a daily chart of the S&P 500, which shows us the 9 EMA versus the 30 weighted moving average. We've seen this before. The yellow line is the 9 exponential moving average, and the light blue line, the 30 weighted moving average. Obviously, since the 9 EMA crossed below the 30 weighted moving average somewhere back on October 10, right after my birthday, bad omen, I guess. We've had this downtrend. So the market has trended down here. And now we have this doji candlestick here. What this means is that there was some buying during the early part of the day at least. And then the market pretty much closed where it opened for the day. Very small body doji here. This could be indicating to us that we might find a bottom somewhere here. The parabolic is still above all these bars, the most recent bar, and it's been that way since we got a flip here in the parabolic back in October 10, October 12, 11, you know. So we're in a downtrend, there's no doubt about it. Daily chart is certainly showing us that. Let's take a look at the RSI. RSI 12 is now below the 40% line, and it's in oversold territory, pretty close to the 20% line. So if the market is this oversold and we're getting a doji, perhaps we'll find some support here. And maybe once the election results are final and people have a good bead on what's going on politically and projecting what could be the case for the future for the economy, we might get a rally from here. I'm betting on that. I don't think we're going to go much lower. Right here we see Larry Williams' pro-buying indicator, which this is the formula of, it's the exponential moving average of the close minus the open for the last 14 days. And so we can see that there was a downtrend here with lower highs all the way. And now this trend line, if we extend it out, seemed to have given us some support here. It seems like some buying came in here in terms of this indicator, okay? Seems that the pros are coming in to buy some stock here. That may be an omen of things to come. In other words, a sign of, a bottom here. Who knows? At the bottom of the chart, percent R30 with the 30 period is also indicating the market's very oversold. So let's take a look at another chart. It seems on the daily chart then that we do have the possibility of an oversold market. Maybe in anticipation of the election results, this market sold off, and now we're waiting to see what happens, and then we move from here. I don't believe we're going to go much lower, but we'll see. Let's take a look at something else. Let's turn to the NASDAQ composite. And on this weekly chart of the NASDAQ composite, once again, we look at the relationship between the Kalman filter, the yellow line, and this blue line, the instantaneous trend line. Well, we did have this very bearish bar, of course, last week, and so the Kalman filter is just above the instantaneous trend line. And the question then becomes, is it going to cross below it? Are we going to get another very bearish bar and bring the Kalman filter below it, signaling a downtrend? Or are we going to find support here? Will the market turn around this week as a result of the election results, etc.? And we didn't get very bad earnings reports, and the unemployment numbers didn't look too bad, to talk a little bit in terms of fundamentals. So The best case scenario is that we find some support of this instantaneous trend line and we bump back up and we get some more buying coming into this market. The RSI 12 is still above 40%, but it certainly broke down and closed below the 50% line. Likewise, MACD is now below the zero line. So every indication here is that, you know, this market is in a weak state. It's certainly trending down. The Nasdaq as well as the S&P, and everything is on the downtrend. So we hit the parabolic here as well. We can see that this parabolic yellow dot is now within this bar. So parabolic is hit, as is said, and now we can probably expect parabolic to go above it. However, if we do get a very nice rally next week, parabolic is likely to go back below the next bar. So again, you know, keep your powder dry. You don't want to be holding too many stocks that you don't feel comfortable holding here. And of course, you may have sold many of them, as I did during the past week or two. But let's take a look at something else, the daily chart of NASDAQ. And this is a daily chart of NASDAQ Composite. And we can see that everything we saw on the weekly chart is reflected here with a number of bars trading, you know, trending down, except for this last doji bar here on the NASDAQ. Again, maybe signaling a bottom here, maybe a rally to come. But if we look at MACD, MACD is trending down below the zero line, so that's not good. That's bearish. And if we look at Jerry Appel's sum of the rate of change indicator, since we got this bearish signal here back in when is this, October, somewhere around October 8th or 10th, yes, 8th to 10th. Since we got that bearish signal, the market has been certainly trending down. So some of the rate of change indicator was a very good one, telling us don't go back into this market. And of course, we had a false breakout here. We didn't get past the 4% line. And since then, it's been downtrend. So we wait to see whether we have a support level that is being hit here. We wait to see what happens with the election. And I'll tell you what I'm going to do myself. Let's take a look at something else. Here's a daily chart of the S&P. Let's go back to the S&P for a minute. The daily chart on the S&P is telling us that the VIX is very high, the volatility index. It's now at 22.5. Notice that when it got to this level, so somewhere around that level, a little higher than that, is where we had a bottom somewhere in June. Now, I don't use the VIX very much, but one of the ways that I find VIX is helpful is that when the VIX is at these high levels and it starts trending down, the market is usually going to do the inverse. It's going to trend up. So we look for whether VIX is going to be a good indicator of what direction of the market in the next week or so, in the next few days actually, okay, after the election. If VIX starts coming down, market starts trending up a bit, we are likely to be seeing the bottom, okay? Let's take a look at something else. Here's a stockcharts.com chart of the impulse indicator, Alex's impulse indicator, red, blue, and green lines. I have to rush a little bit here because we're coming to the end of the video. And so we do have all these red bars still. We are crossing below the 2100 as we saw on the other charts. At the bottom of the chart, percent R is crossed below 50%. It does look as though this thing could go lower, but we can hope for a rebound. The daily chart, let's take a quick look. On the daily chart, we can see this downtrend since the 9 crossed below the 30 somewhere here. And we are still in downtrend, but we are in very oversold territory now. We can see when it was oversold here, here, and here, the market tended to rally. Have a nice weekend, the rest of the weekend. It's Sunday and evening. Enjoy football or whatever. And look forward to the madness with the election. Have a good weekend. Bye-bye.